Good morning, everybody. Thank you for attending this Ichimoku Trading Strategies webinar, and thanks for being here last week as well. So today we will discuss part 4, using Ichimoku with other tools. This session is recorded and I will provide you the link, the same as the last time, as well as the notes. Ichimoku is a one-glance equilibrium chart because it lets users determine the medium-term and short-term bias of a position instantly at one glance. It shows the momentum, the sentiment, and the strength of the trend. It is an effective tool for trending markets, whether the global stock market, the forex market, the commodities market, practically for any kind of trade. So I'd like to show you how we can use this for the forex market. So this is the Euro FX USD chart showing a trending market. This chart shows that the currency pair is bullish on the 4-hour time frame. The trend changes swiftly from an uptrend where all Ichimoku elements are above the Kumo to a downtrend where Ichimoku elements are below the Kumo. And then there's a reversal or a sudden change of bias to an uptrend once again once the Ichimoku elements have given positive signals. So it's easy to find at one glance the impending shift in bias using Kumo twists and other signals. As you know, Kumo twists happen 26 periods ahead of any impending change in price. Therefore, Ichimoku practitioners like us are warned of this change ahead of time so that we could prepare for this. In an uptrend, once price drops below the Kumo, it is a strong signal of changing bias to a downtrend. In a downtrend, once price goes above the Kumo, it is a strong signal of changing bias from downtrend to uptrend. So the signals in Ichimoku are very clear. So one thing to note is that Ichimoku is not very effective in ranging markets because it will give many false signals. Here's an example. This USD CAD currency pair shows some sideways movement within its chart. Here are the two areas where prices traded within a range. Can you use Ichimoku to profit within this range? The answer is no, or maybe, or not very easy to do so, because it's not very effective for use in sideways markets. You'll find that the Ichimoku elements within these ranges are frequently changing signals. For example, in trading range number 1, price crossed above and below the Kijun Sen at least 5 times within this short time frame. The Tenkan Sen also crossed above and below the Kijun Sen with a price. In addition, there were many Kumo twists within a very small price range. So how could you possibly profit from a movement like this where the ranges are so tight, the range is so tight, and the signals are on and off? So you get a buy signal here and then a sell signal later. You just bought your stock. It hadn't risen 2% yet and it's gotten a sell signal already. But if you read into this market very closely and you're an Ichimoku user, there's one clue that this market was going to be stuck in a range. That is this green line, which is the Chico span. It had been moving sideways. It couldn't make newer highs, although it had been making higher lows. It couldn't get out of the price bars. It had been getting in and out of price bars within the range, so you know that there's no definitive move, and it couldn't break above its previous highs. So if you are trading using Ichimoku within this range, you are more likely to lose money than to earn because the signals are very confusing. So your profit potential will not be worth the trouble. So after all the false twists and crossovers, the Chico span finally breaks above the range and made higher highs. So this breakout is the confirmation of a new and incoming trend. So this is the uptrend where we could apply Ichimoku trading strategies. As long as price is above the Kijun-sen, the uptrend is intact and the trend is bullish. But once we get into this trading range, we avoid using Ichimoku as a trading strategy. Now let's review the 6 elements of Ichimoku. So in Ichimoku, if you use a different chart, for example, the make trade chart uses different color codes for the elements. Investograms and PSC tools also use different color codes for the Tenkan-sen and the Kijun-sen. So I guess you just have to adjust your charts, or you can just be flexible when applying these color codes to your charts. So these are the 6 elements of Ichimoku. The Tenkan-sen tells you the short-term bias. If price is above the Tenkan-sen, you have a bullish bias. If price is below the Tenkan-sen, you have a bearish bias. But we're only talking about the short-term trend here. So this Tenkan-sen is based on 9 periods. So it represents a short-term trend, and the bias may be bullish in the short term, bearish in the medium term, or vice versa. The Kijun-sen is the red line. It is also known as the reference line or the standard line or the baseline. The most important function of the Kijun-sen is as an equilibrium line or a medium-term equilibrium line. So this means that if prices are too high, price will tend to correct back down. If prices are too low, it will tend to correct back up. So therefore, this is the medium-term resistance. It is also the medium-term support line. Then we have the Chico span or the lagging line. This is the current price plotted 26 periods behind. It provides us perspective of where prices are with respect to where it was previously. It defines ranges. It also defines supports and resistances. The Senko span A is also known as the leading or preceding line 1. This is the average of the Tenkan-sen and Kijun-sen for the past 26 periods. And it is plotted 26 periods forward. The Senko span B is also known as the leading line 2. It is the average of the Tenkan-sen and Kijun-sen for the past 52 periods, plotted 26 periods forward. It is the shaded area between the Senko span A and B. So a Senko span cross happens when the sentiment changes. Senko span A and B reverse positions. So this is what we call a Kumo twist. So these are the signals in Ichimoku. This is the chart for AC or Ayala Corp. The Ichimoku Elements all made bullish crossovers. First, you have the bullish Tenkan-sen cross above the Kijun-sen. You have a Chikou span crossover above the price. A price crossover above the Kijun-sen. A Kumo breakout. And the bullish Kumo twist. The next chart is the chart for MRP. The Ichimoku Elements all made bearish crossovers. First, you have the Tenkan-sen bearish crossover. This chart shows that the Tenkan-sen crossed below the Kijun-sen line. Then there's the Chikou span crossover below the price bars. The Kijun-sen crossover, where price crossed below the Kijun-sen. A Kumo breakout to the downside. And a Kumo twist. These Ichimoku Elements warned us of the bearishness of MRP. Now let's look at the same elements in our chart of to-go. To-go made a phenomenal run from around 1 peso to the 20 levels, but right in this chart we will show you the run starting from the 6 peso range. It had been stuck in the 6 to 8 peso range for about 1 year, from 2016 to 2017. There was a Tenkan-sen crossover, a Chikou span crossover, a Kijun-sen crossover, a Kumo breakout, and a Kumo twist at the 6 to 8 peso range. This range lasted for 1 year, from 2016 to 2017. So the Chikou span was inside this price range for that amount of time. The prices were below a thin Kumo, showing weak resistance. And then this long bullish candlestick appeared here in number 1. This candlestick was actually your trigger to buy. At this point, the bullish crossovers mentioned earlier happened as well. And the market followed through with strong buying days later with new trading ranges at higher prices. So this breakout was accompanied by breakouts in Chikou span as well for all the remaining breakouts. When prices break out above their ranges, they often come back and retest the previous resistance as support. In the same way, the Chikou span creates the boundaries for the trade by also retesting its previous resistance as new support. So to-go establish an uptrend and use the Kijun-sen as its support line. It actually trended very strongly so that it only went as low as the Tenkan-sen during its corrections. So one breakout after another. In this last price range, it seemed to have established its peak. There's a strong move downward in prices, and the Chikou span also broke below the price bars, showing sideways movement. So this is the slide that shows what happened next after the Chikou span went below the price bars. Price went sideways and then downward. These were the 5 bearish signals. Once again, the Tenkan-sen crossover, the Chikou-span crossover, the Kijun-sen crossover, the Kumo breakout to the downside, and the Kumo twist. So last week we covered parts 1 to 3, Ichimoku Kinko-hyo, the elements of the Ichimoku system, and the Ichimoku signals. We also covered the first 3 lessons in part 4, setting price targets, trend following, and bounce place. Today we will discuss multiple time frame analysis, Ichimoku and divergences using technical indicators, using Ichimoku with the Fibonacci ratio, and some trade examples. So let's start off with lesson 4, multiple time frame analysis. I would like to show you a chart on multiple time frames. This chart is a time frame selection chart. It shows you the different types of trades and the time horizon for each type of trade. It also shows you the appropriate time chart to be used for each time horizon. Each chart time frame must be confirmed with charts with higher time frames to confirm the bias. So you have the trade types, the time horizon, the chart time frame, and the confirmation of your bias with whatever time frame, higher time frame. So if you have a very short trade time frame, for example, you want to trade within the day or a few hours, you use the chart time frame 5 to 10 minute time frame to enter and exit the trade, but you have to confirm your bias with the 1 hour time frame. For a short-term time horizon, for example, you want to hold the security for a few days, you have to confirm your bias. If you see that it's bullish on the daily chart, you confirm your bias with a 1 week chart or the weekly chart, and then you enter and exit using the hourly chart. If you're into it for a medium-term position, for example, a few weeks, you confirm your bias in the weekly chart with the monthly chart, and you enter and exit using the daily chart. If you're a swing trader and you want to go longer term, your time horizon is a few months, you confirm your bias with a 6-month chart, but you enter and exit using the weekly chart. So here's an example. We would like to do a short-term trade on MEG with our time horizon of a few days. So we find that MEG is bullish on the daily chart. The support is at 526, where we find the Kijun-sen and the Tenkan-sen almost in the same areas. Now this is the weekly chart. We confirm our bias. We know that it's bullish on the daily. We also try to see if it's bullish on the weekly chart. So here we find that it is bullish because all elements are above the Kumo. The near-term support or the Tenkan-sen is at 515 and the Kijun-sen is at 470. Now we use our hourly chart to determine our entry and exit levels. In our hourly chart, we find that the Tenkan-sen and Kijun-sen are at the same levels at 530. The Senkou A is at 528. So we have a very tight buy range for MEG. And these are 2 strong support levels. We can buy in that level, in that area. And our exit level would be a break below the Kumo. Since this is a short-term trade, your time horizon is very short. Therefore, your cut loss and entry levels will also be tighter because you're only in it for a day trade. So don't try to hold the position longer than you intended it to. If you want to trade it for the day, then you have to only trade it for the day and not end up trading it for weeks when you intended to trade it only for a day. So here's what happened after our entry level at 532 to 528. The price made an uptrend within the next 2 days, and you would have been able to sell last Friday at a decent gain. Again, it comes with its risk. If you're trading for a short term, your profit potential may also be limited because you don't want to hold on to the position longer. Of course, the longer you hold on and in an uptrend, the higher your profit potential. So day traders often use volume to gain higher profits. So the more you buy, the larger the accrued profit. However, you have to take into consideration the expenses, the commissions, the taxes, etc. when trading for short term. So we have to establish a general rule that higher time frames have more significance than lower time frames. A 1-year chart where each bar signifies 1 year is more significant than a weekly chart, while a weekly chart is going to be more significant in its support and resistance levels than a daily chart. An hourly chart has more significant levels than a 5-minute chart, for example, and so on. So this is a general rule that we have to accept because it's been proven over time that market swings or movements in higher time frames will almost always affect the swings in lower time frames. However, this doesn't mean that a swing low on the daily chart means that there won't be any swing highs on the hourly charts, but the daily swing will affect those hourly swings. That's why we like to trade along with the higher time frame. However, we only use the higher time frame to give us indications of what will be happening in the market next on lower time frames and to confirm our bias. So if you trade lower time frames, opposite higher time frames, or in reverse to higher time frames, then your profit potential is going to be lower. For example, your higher time frame says it's bearish, but your lower time frame says it's bullish. You try to trade that lower time frame, your profits will be limited because your higher time frame is bearish. It's going to limit your gains because you have strong resistances in the higher time frames. Your risk is also higher if you trade against the general trend. So your risk-reward ratio may not be as good as if you were trading in an uptrend in the lower time frame and in the higher time frames. So for example, you find in this daily chart that a security is bearish and the trend is sideways to down. So this is the daily chart. This is using the USD JPY chart. So for example, you enter a short position at this level because price is already below the Kumo. Your stop loss would be the Tenkan-sen line above. And then you could use the Chico span support levels as your possible bounce points. So if you look to the left, you will find the Chico span. You will also find the Senko B in the same level. So there's a confluence between Chico span and Senko B at the left. If price fails to bounce off that point, then you have another bounce level to look at the bottom. So this is in the case where you're shorting the market. These are their bounce levels. So at bounce point 2, there's also a Senko span and Chico span confluence to the left. So you have to adjust your stop loss point as it goes higher. So this is how you could be trading this chart using daily chart time frame. So you would be shorting this market. Now let's look at the lower time frame of the same chart. This is the 5-minute time frame for the same day. So you would find that on the 5-minute chart, the trend is completely opposite. The trend here is upward, while the trend in the daily chart is downward. Would you do a short trade or a long trade in this? If you're using this particular chart, you would go long because you should only focus on one chart when entering and exiting, when executing a trade. So the higher time frame, for example, the daily chart, only tells you where the strong resistance is or the strong support is. For example, you see that there's a bounce in the 5-minute chart and a longer term chart says it's on a downtrend. The daily chart says it's in a downtrend, but there's a short relief rally in the 5-minute chart. Then you already know what the resistances are based on the daily time frame. So you use that as your guide when selling into an uptrend in the 5-minute chart. So for example, your resistance in the daily chart is 5 pesos. And you see that the daily chart, the 5-minute chart, went as low as 450. You would be selling during that short-term uptrend at 5 pesos because that is your resistance on the daily chart as well. So that is a strong resistance. But the 5-minute chart may also give you lower resistances. If there's already a resistance at 480 in the 5-minute chart, then you tend to sell there. It only shows you that the maximum selling price based on the daily chart is at 5 pesos. So you see that price bounced off the Kumo in this 5-minute chart. So you enter the long position there because price is at the top or Senko span level, Senko span A level. Then you also put a stop loss below the Senko B. Your target 1 or profit take level is at the Kijun Sen because that is now your resistance. Target 2 or second profit take level is at the Chikou span top of the range. So this should be your resistance levels. And this is your target level 2. So never mix your time frames. The previous trade on USDJPY was a 5-minute trade that is on an uptrend, while the daily chart is on a downtrend. This was the downtrend in the daily chart. And these were the bounces in the 5-minute chart that we discussed earlier. We were essentially trading against the trend. We were trading against the general trend using the lower time frame chart. While you may be able to profit from the swings, your profit potential is also limited. Your risk is also higher because you are trading against the general trend. So when you go long in this trade, you're actually getting into a high risk, low reward setup. So your better option is to trade with the general trend. If the general trend is down, then we'll take a look at the 5-minute chart to see the highs and the lows. Then we will want to pick a specific entry using the candlesticks, the Kijun Sen and the Tenkan Sen, and even add those divergences into the set of indicators, which we will discuss later. So always trade your time frame. If you decide to trade the lower time frame against the general trend, you have to know the risks. And if you enter from the 5-minute chart signals, you also exit with the 5-minute signals. Never mix time frames. Do not enter on the 5-minute chart signals and exit using the daily signals. Now, so this is the main reason why many traders end up becoming investors, because they try to enter, they try to day trade and then they get stuck. They end up losing, or they end up holding the position for longer because they were not able to exit using signals from the lower time frame which they intended to trade. Kung gusto mo chupit lang, you failed at executing the trade, you end up holding it longer than you intended it to because you did not trade using your time frame. Time is gold. There are two important elements in stock trading. Like we mentioned last time, these are price and time. We want to be able to enter and exit a trade at the right price and at the right time in order to maximize our profits and minimize our losses. So we have to establish our bias across time frames. We enter and exit using only one time frame, and we always trade with a bigger trend. So it all has to do with the theory of multiple time frame confluence. If your higher time frame has a bullish setup, for example, the monthly chart shows you're bullish, and your lower time frame says the weekly and daily charts are also bullish, then you have a multiple time frame confluence. This will give you the best trades, the best risks and reward scenarios, and easier entries and exit. So you reduce your risk and maximize your potential for every trade because you are not contradicting the higher time frame. Here's a very good example of multiple time frame confluence. We have Annie. Do you want to hold Annie for a medium-term position for a few weeks? We use the daily time frame for entry and exit, but we confirm our bias using the monthly time frame. So the monthly time frame is bullish because the price is above the Kumo, the Tenkan-sen, and the Kijun-sen. The Chikou span is already inside the Kumo, and therefore the first resistance, which is the Senkou A, is already broken. It only has the Senkou B to contend with once it gets to that price level, which is very far away. So we look into the daily chart to find a good entry point. Sorry, let's go back. This is the weekly chart. We also find that it is bullish on the weekly chart. Now this is the daily chart. We enter at 10:20. This is entry 1, which is the Tenkan-sen. Entry 2 is at 9:80, the Kijun-sen. Your exit is below the Kijun-sen. This is your exit 1. You can sell half at this level. Exit 2 is below the Senkou B. You can sell the other half below this level. Of course, it all depends on what kind of trader you are. You can exit everything if you have a tight stop below the Kijun-sen. Or if you're more bullish about the security, you can wait until a break below the Senkou B line. Or you can divide the exit between the two exit levels. This all depends on you as a trader. So essentially, if you enter and exit Annie, even if you make a mistake in entering Annie in the daily chart, since the general trend is still bullish, there's easier chances of getting out of it alive or with profit because the higher time frames are bullish and price tends to follow trends. This is why we call it an easier trade. Even if you make a mistake, or if you enter in the 5-minute time frame or the 10-minute or hourly time frame, and you make a mistake in the entry, there's still a higher chance that you will be able to get out of it because it is trending higher in the weekly and monthly charts. Now, for example, we want to use IMI for a swing trade. Our time horizon is months. We want to hold this for months. We look at the monthly chart. It's bullish. Now we confirm the bias with a 6-month time frame. This is not much because IMI had only been listed a few years back. But nonetheless, this shows you that it's bullish because it's above the Tenkan-sen line, above the blue line, and it's a very strong bullish green candlestick. Now we use the weekly chart for the proper entry levels. We see that although price had been trying to break above the previous high, the Tenkan-sen is still detached from price because it had a strong momentum recently in the short term. Your proper entry level is a Tenkan-sen. This requires patience in waiting for price to gain equilibrium with the Tenkan-sen and the Kijun-sen, because in a situation where you want to hold the security for a longer time period, you also have to be willing to wait longer for the proper entry levels. It may be at a higher price, but what we are after is to enter at a strong support level. So you wouldn't be entering yet in IMI if you have a longer time frame. You have a lot of time to wait for prices to correct to lower levels, or at least at the Tenkan-sen level before you enter. Because you're after longer term, or you're in it to become an investor. You're not trying to chase prices because you don't want to be a momentum trader anyway. You have all the time to wait for this to go back to equilibrium. It may be at a higher price. It might be able to restore equilibrium, say at 25 pesos. But the important thing is that price is attached to the Tenkan-sen when you buy into the security. Because if you look at the chart, price made a drastic drop previously, a few months back in August. That would have been a good entry level for long-term investors or those who want to hold this for at least months. So you have to be patient in your entry and exit as well. So momentum traders enter on breakouts. Position traders enter at support levels. Now, we'd like to show you securities which have a bearish bias across time frames. This does not mean that this does not have a chance to rally, but this is a more difficult trade because you have a bearish bias. And if you have a wrong entry in the lower time frames, then you would have to wait a long time to get out of it because the higher time frames are also bearish. For example, LC, this bearish on the daily chart because the elements are below the Kumo, or the price is also below the Kumo. Note, however, that it may still be profitable because you're able to range trade in between the Tenkan-sen and the Kumo top, or the Senko B line. It had been this movement has been with the movement for LC for the last few months. It had been range trading, so you can still make money out of that. And last week it made a green candlestick after that doji, so there's a possibility that this may rally back up next week up to the top of that Senko, up to the Senko B line at around 197. If you look at the weekly chart, it is also bearish on the weekly chart. Price is even below the Tenkan-sen and the Kijun-sen. But let's go back. What we like about the daily chart is that it already made a Kumo twist. However, it has not been confirmed in higher time frames. The monthly time frame is also bearish. There's a very thick Kumo above prices. So it has a very strong resistance to break. And if you look at the the Kijun-sen, the red line, that pertains to the 197 to 220 resistance that we find in the daily chart. So this would be a more difficult trade than trading ANI, whether in a short term or on a longer term basis, because your risks, your rewards are very limited. Now here's another one. There's a bearish bias across time frames for PLDT or TEL. This is the daily chart. We also see that it is below the Kumo. There's already a Kumo twist. And then it twisted once again. So this is still in a sideways position. Sideways to downward position until it breaks above the Kumo. Bearish on the daily. On the weekly, it's also bearish. Although it tries to break out of the Kumo, it's still bearish because it is faced with the Senko B line. There's also a Kumo twist, but until prices are able to break above the Tenkan-sen, then this is still on a downtrend or a sideways movement. TEL in the monthly chart is also bearish, so this is a good trade for shorters to enter. It has a higher profit potential than trading it for position trading, because your profit potential is limited to the first resistance is this Tenkan-sen in the monthly chart, which is at 1,800 levels. So we have other securities that have a bullish bias across time frames. For the past few months, this has always been MAC and IMI. Multiple time frame confluence. You have bullish confluences in MAC, MEG, FLY, BDO, SM, SECB, CPM, and SMPH. So I'll just show you some of them. Let's go to Instagrams. MAC. This is the daily chart for MAC. It's bullish. It's a strong trend. You have a weekly chart for MAC. It's also bullish, trending above the Kumo. This is the monthly chart for MAC. It is also bullish, which is trending above the Kumo. So that's why it's an easy trade to get into and out of. You have MEG, the same thing. We already showed this earlier. Let's go to FLY. Although it seems to be moving sideways, technically it's already on an uptrend in the daily, in the monthly, and the weekly chart because it's above the Kumo. The Chico span is already at the top end of the prices. In the monthly chart, it's only being hindered by the wick. So this is a strong chance of breaking out. BDO has been one of my favorites lately because it had been breaking out consecutively. There have been two breakouts for the past month. So this is the daily chart, the weekly chart, and the monthly chart. Look at those candlesticks. In the monthly chart, there's a strong trend. These candlesticks, consecutive green candlesticks for the past few months. You have SM, monthly, daily, and weekly charts. Security Bank, weekly, monthly, and daily charts. CPM, even though daily chart already broke below the Tenkan-sen, this is technically still on an uptrend because Kijun-sen is still not broken, and it's also above the Kumo. The weekly and the monthly charts. Look at the monthly chart. It already broke above the Kumo as well, so this is already bullish on the monthly time period. And lastly, also one of my portfolio favorites is SMPH. Monthly, weekly, and daily. Now some securities have conflicting time frames. Now this is when the daily, weekly, and monthly charts disagree on the bias. We have GSMI, which made a strong breakout lately. It broke out on the daily chart and on the weekly chart. But it is still below the Kumo on the monthly chart. The screenshot was on October 12. Yesterday, it is stopped at the Senko A level on the monthly chart. Let's show you. I'd like to show you. GSMI. This was the monthly chart. It is hindered at the Senko A level. We have yet to see whether it will be able to break above that level. So this is when we say we have a defined resistance already at 1720, because the monthly chart shows the Senko A at that area. So if you're trading this, for example, it looks very bullish on the daily chart. You know that there's no resistance on the daily chart, but you have to look at the monthly chart. There is resistance. You won't have a clue that there's price might stop at this area if you only look at the daily chart, right? Because there's nothing on top of it, no resistance. There's also no resistance on the weekly chart. You think it could go on forever, but the monthly chart says otherwise. You might have to rest at this level because there's strong resistance at the Senko A at 1720. Now let's look at another example. Here's Bloom. Let's go to the daily chart. Right up until this area, Bloom was bullish at the left side of the screen at this area. Bloom had been trending strongly up until the 1194 levels. This was the area of Bloom's chart which was bullish, the left side. The daily and the weekly charts were bullish at this area before the blue line. However, we will look at the higher time frame for strong resistance like we did for GSMI. Like what we discussed last week, this was the line, right? And this was also the area where it peaked at the Senko A line at 1194, which was the high in September. So you should be ready to react at that area if the resistance is not broken. And that is exactly where Bloom hit resistance. The monthly Kumo already told you that this is a strong resistance. But if you only look at the daily and monthly chart, you would think that this would go on forever. That's why it's important to have a view of the higher time frames as well. What was your clue that this was going to hit peak here? You might be able to look at the resistance here as well. There's a range resistance, and you can also use Fibo, like what we did. Okay, these are the resistance levels for Fibo. There's another one. 2.272, yeah. So You would have been able to use Fibo to find this out. There's a resistance here. 1220 areas as well at 2.72 extension, Fibo extension. There's a confluence between the Fibo resistance and the monthly resistance in Bloom. So we'll talk about Fibos and Kumos later on. But this just shows you the importance of looking into the monthly time frames. Here's another one, STI. Start with the daily chart. STI is bullish on the daily chart, bullish on the weekly chart. On the monthly chart, it is still not free because it's still not above the Kumo. It has this resistance to contend with, the Senkou B line. So if you're looking into trading STI, this month the resistance is at 215. If it decides to move next month, your resistance will be lower at 212. As it moves sideways, the resistances are lower because, like we said, time and price come together to form supports and resistances. So as you move, as time corrects as the price takes a longer time in correcting, the resistance levels become lower. So at this point, May 2018, if this still is stuck inside the cloud or the Kumo by next year, your resistances are now 174. It lowers. The resistance lowers as time moves along because there are less sellers on top, less sellers at higher levels. Perhaps the sellers would be lowering their bids, their ask prices, just to get out of the security because they've been waiting too long. So as long as time goes by, the sell levels of holders become lower because they just want to get out of the position. So it depends on whether the sellers or the buyers are stronger. If the buyers are stronger at this point, then it will be able to break above higher resistance levels. If not, if buyers are more patient, they're able to wait longer. They're able to accumulate securities at this area inside the Kumo and then proceed to a breakout at lower levels. Now, so ang resistance na lang ng mga jockeys dito would be 172. It's easier to push it out of the Kumo at 172 because it's close by. But if they want to push this now, they have a long road to a lot of resistances to contend with. And the strongest resistance at 212. So do you need a lot more money to push this stock higher if you want to push this now? But if you want to push this later, you only need time. You need less money and more time to push it at lower levels. So that's what jockeys would probably be looking into. Do you have more time or do you have more money? Apple. Let's go for the daily chart. Daily chart, it's bullish because it's above the Tenkan-sen, Kijun, and Kumo. As you can see, it already made the bounce of the Tenkan-sen. This could retest its next high next week because it was able to bounce above the Tenkan-sen level. This is the immediate resistance. First is 55 and then 59. What do we see in the weekly chart? Yon. You see where the areas where we marked? This is the weaker resistance. This is the stronger resistance. That is where it hit resistance at the top of the weekly Kumo, which is at 59. So yan yung Senkou A ng weekly, which already served as resistance. It is bearish on the weekly because it is not able to get out of the Kumo. On the monthly, that approximates 58 naman yung resistance sa monthly, which is also the Tenkan-sen in the monthly chart. So that resistance, 59, 58, is shown on the on the weekly and the monthly charts. Monthly, it's above the Kumo, but it's not yet above the Tenkan-sen. That is why this served as strong resistance. Kaya dyan siya nauntog. Others, PNX daily, sideways to downward action already because it's already inside the Kumo. It was not able to sustain. It tried to break out. It failed to break out. And now it's inside the Kumo. So it is bearish already. On the weekly chart, it's still bullish because it still has to. If it finds support at 1070 on the weekly chart, then you go back to the daily. There's a high chance that this will bounce off the Kumo bottom as well. The Kumo bottom is at 11 pesos, so it might overshoot to 1070 and then bounce back up because the weekly chart is still bullish. And this is the stronger support level. Of course, it might just be a dead cat bounce. So we'll see. We have to confirm that. What do we find on the monthly chart? The strongest support is at 10 pesos. So the supports are very far away, so it might be a difficult trade at this point for PNX because the support, there's no strong confluence of supports at for example, at the daily chart, there's no strong confluence at 11. Your strong support is at 10 at the monthly chart. And then the medium term support is at 1070 at the weekly chart. So if you're trading this short term and you just want to trade the bounce, you might be able to catch some at 1068 and then trade the bounce to 12 at the weekly chart using the weekly chart. At extreme cases, your pickup point would be 10 pesos, which is the monthly support level. So this is a difficult trade as of now because there's no strong confluence at any area. So stay away from difficult trades. RFM on the monthly chart is still consolidating inside the Kumo. It's still bearish. Weekly chart, it has to break above the 470 level. Daily chart, it's already above the Kumo. But again, look at this level. This is the 470 level in the daily. It's the same resistance as what you have in the weekly chart. 470 level. This is 474 on the weekly chart. So untog na siya dyan. The best you can do is to wait for a breakout. If you want a break, if you're entering in a breakout in the weekly chart at 474, you will meet resistance at 520. So if you want to be more, if you want to hold this for longer term, just wait for a break above 520 before you enter RFM. If you want to do a short-term trade, you can enter at 440, sell at 470. That's the range on a short-term trade. This is the range. But it's a low reward setup because 440 to 70, that's not a huge increment from 440 to 470. Now let's go back to our keynote. Let's move on to part 5, using Ichimoku with other tools. Lesson 1, using Ichimoku and divergences. So we will be using technical indicators to determine divergences. So there are many people use different indicators along with Ichimoku. Some use RSI, some use CCI. CCI is a good indicator for quick trades because it's a leading indicator. It reacts quickly to prices. Excuse me. You can also use other indicators. For this lesson, we will use the oscillator. You find the ultimate oscillator in your Investograms, PSC tools, call charts. Okay, so what is the ultimate oscillator? Unlike RSI or other indicators, the ultimate oscillator captures momentum across 3 different time frames: the daily, the weekly, and the monthly charts. So this is computed based on the 3 time frames. It is a momentum oscillator. The use of multiple time frames avoids the pitfalls of other indicators. What happens with other oscillators is that when price makes a strong move, they start forming bearish divergences as the move is happening because they are stuck in one time frame. So if, for example, you set the RSI based on the daily time frame, you get a bearish divergence in that daily time frame, but this bearish divergence does not take into consideration the weekly or the monthly charts. Thus, the ultimate oscillator tries to avoid or correct this problem by incorporating longer time frames into the basic formula. So a buy signal is based on a bullish divergence, while a sell signal is based on a bearish divergence. We will use these divergences in the ultimate oscillator along with Ichimoku to get a strong conviction on entries and exit. So what are divergences? When a technical indicator disagrees or moves in the opposite direction as the price action, it creates powerful technical signals called divergences. There are 2 kinds of divergences, regular and hidden. There are also 2 biases for divergences, bullish and bearish. Divergences provide reversal or continuation signals. Regular divergences are signals for possible reversals. Hidden divergences signal trend continuation. So this is the difference. The regular divergences show you reversals. Hidden divergences show you trend continuation. So let's discuss regular divergences first. How do you spot them? So a regular bullish divergence is when the oscillator is making higher lows while the price is making lower lows. So here you have any indicator, RSI, CCI, STS, MACD, ultimate oscillator. So that's the movement. The indicator is making higher highs, higher lows, and the price is making lower lows. So the indicator and the price disagree. So this is the chart for EDC. This was in April 2017. So this is not the current chart. EDC had been on a downtrend for 1 month until December 2016. So I think I used Investograms and changed the colors of the lines in this chart. So nonetheless, the pink line, the blue line is supposed to be, the pink line here is the Tenkan-sen. The blue line is the Kijun-sen, just to note. It had been on the downtrend since December 2016, and this was signaled by a Kuma twist in November 2016. All elements are below the Kumo. Price had been trending below the Kijun-sen line, and that served as a resistance. There have been attempts to break above this Kijun-sen line. This was the first attempt. It tried to cross above, and then it formed double tops in the candlesticks at this area. So it dropped big time. And then there was a second attempt to break above the Kijun-sen line. Traders may have been faked out by this move because price actually went above the Kijun-sen and stayed there for a few days. However, if you look at where the Chikou span is, 26 periods back, when this crossover happened, you would know that this breakout was going to fail because Chikou span could not get above prices. First of all, you must recognize that the bigger trend always wins. The general trend in this chart is down, so this is a stronger trend, and the bounce is only a counter trend. Prices could try to make small bounces in between or even break its resistance, but if the volume is not strong enough to take out all the sellers, that bounce is likely to fail. So as an Ichimoku trader, what was the tell or the clue that this number 2 was going to fail? Again, it was the Chikou span 26 periods back, which was hindered by the price bars. It could not break above the price bars. This was the first reason. The second reason, or the second clue, was the Kumo. There was no bullish future ahead. There was no Kumo twist in the future. If you count 26 periods ahead of this candlestick, number 2, there's no Kumo twist. The Kumo was still red 26 periods later. So we assume that this market will continue to go down or sideways. So how do we spot the reversal? This was our first clue, the divergence. This warned us of a change in trend. Divergences could also make fake moves. This is why you have to couple it with signals in Ichimoku for a stronger probability. So again, we use the ultimate oscillator. The ultimate oscillator requires 3 steps for a buy signal. First, there is a bullish divergence between the oscillator and the price. This means that the price forges a new low. Then the ultimate oscillator forms a higher low. We need a higher low in the oscillator because it shows that the momentum to the downside is getting weaker. So second, the low of the bullish divergence should be below 30. So what is the low? It's the one at the left. This is to ensure that prices are at least oversold or is at an extreme condition. So the first low should be below 30. And then the second low, or the high of the bullish divergence, not the second low, but the high of the bullish divergence, the higher high of the bullish divergence, there should be a higher high. And then this should proceed to making higher lows. Sorry, erase all that. There should be a higher low, not a higher high. So there's a low of the bullish divergence below 30. And then there's a higher low. And then the ultimate oscillator should proceed to make higher lows moving forward. So the oscillator rises above the previous low of the bullish divergence. So now that we have established that we have a powerful divergence that may signal a reversal from the downtrend, we now look at the Ichimoku indicators. So after that divergence, we find the following signals. This is a Tenkan-sen crossover, price cross above the Kijun-sen, a Kumo breakout, a Chico span crossover, and a Kumo twist. From then, EDC started to reverse and price trended from a low of 489 to a high of 612. However, it hit a strong resistance at this area and then consolidated. So what happened next was a breakout above the 615 area. And then the trend shifted. Moving forward, it's already below the Kumo once again. So that is the story of Ichimoku's EDC's bullish divergence. Let's go to our next topic, the level, the signal, and the trigger. So granting that we have already found the divergence, and we already found some bullish Ichimoku elements, do we just buy at any price and at any time? Could you enter anywhere as long as it is bullish? So again, we want to maximize our profits and minimize our risks. So as traders, we must find the lowest possible entry for the time period and sell at the highest possible price. There are three things we should consider when making an entry. First is the level. Levels are supports and resistances. Support is the best level to buy because the risk is low. The resistance is the best level to sell because the upside risk is also low. So if divergences are present at support levels, then it would make our entry more favorable. The signal tells you that it is about time to enter the market. For example, if you see several candlesticks testing the support level many times and then bouncing off that level, it tells you that the support holds, and that could be a good bounce point. The trigger is what confirms your bias. For example, after price tests support level many times, it bounces with a bullish engulfing candlestick that breaks above the previous range, then that is a trigger to buy. So the level is where to buy. The signal tells you it's like the yellow light in a traffic light. It's almost time to buy. The trigger is your go signal to buy. So here's an example using the same EDC chart. So after the bullish divergence here, you find the level, the signal, and the trigger. The level is the support line or the Kumo top, which is your new support after the breakout. So price went above the Kumo and retested the Kumo as the new support. So that is your level. Your signal is the fact that the support at the Kumo is able to hold. It made a gap down. The price dropped towards that Kumo level and it was able to hold. So that was a signal that this is a strong support. The next day, there's a gap up on prices. So that is another signal that this support level is going to hold. Your trigger to buy was a close above the Tenkan-sen line. So each trend starts with a Kumo breakout. So this marks the beginning of the trend for EDC using Ichimoku because there was a Kumo breakout and then a retest of the Kumo. So you buy your securities once prices retest the Kumo at its support level as the new support level. So here's some examples. AGI. Price had been on a downtrend. At this point, price tried to break above the Kumo but failed. The Chico span also tried to break above the prices but also failed. There was no bullish divergence yet at this point. Previously, you There's no bullish divergence spotted. A bullish divergence actually happened after this price movement. And this the low of the low of the ultimate oscillator, or the low of the divergence, was below 30, which satisfies the condition. And then there was a higher low in the divergence, which formed the divergence. There's a higher low in the ultimate oscillator. At the same time, there was a Tenkan-sen crossover above the Kijun-sen. Or not at the same time, but a few days later. And as that happened, the ultimate oscillator also made higher lows. There's a Kumo twist. So the sentiment was starting to get bullish. Price broke above the Kumo, and the Chikou span also broke above the price bars. And then price made an uptrend. Now let's talk about the opposite of bullish divergences, which are bearish divergences. Now when price trends up while the oscillator trends down, we have a regular bearish divergence. Price makes higher highs. So in a bearish divergence, we are looking at the highs of the prices and not the lows. Now, so we're looking at the highs. There are higher highs in price and lower highs in the indicator. So it tells you that the market is about to reverse from uptrend to downtrend. So if these bearish divergences are signaled or confirmed by signals of Ichimoku on a chart, then we can place a sell order on the position. So this chart is on an uptrend and had been trending above the Kijun-sen line, and that served as support. So there's a bullish Kumo twist and a bullish Kumo breakout and an uptrend. Price tried to break below support, but it was met with a bounce. This was the first attempt. It was met with a bullish engulfing candlestick. So this was the level at which you buy the top of the Kumo. The signal was the four consecutive candlesticks that was able to survive above the Kumo. And your trigger was that bullish engulfing candlestick that closed above the Tenkan-sen line. Here was a second attempt to break below the Kijun-sen. Again, your level to buy, if you weren't in this position yet, is that level, which was the Kijun-sen. Your signal was the three candlesticks that oscillated or that were able to find support at that area. Your trigger was the candlestick that crossed above the Tenkan-sen days after. So the double bottom is also a sign that this was going to survive as support. Now at the third attempt, price was able to break below the Kijun-sen. So the third attempt to break down was successful. However, it bounced on top of the Kumo, but was not able to survive for a long period of time. It immediately broke below the Kumo. Now, if you look at where the Chikou span was, 26 periods before, it was already below price. So that was your clue that this was going sideways to downwards. In the first two attempts to break down, the Chikou span was still above prices, so there's less probability that this will break down. But on the third attempt to break down, the Chikou span already agreed with the bearishness and broke below the price. So this was your confirmation that this was going to be a successful breakdown. Now, what would increase the probability that this would break down? Aside from the Chico span and all the elements, another probability booster would be your bearish divergence. If there's a strong case for bearishness, then we need to sell our position. So this was your first probability booster that this would be a successful breakdown. There was a bearish divergence. The second was, and that bearish divergence was also above 70 and it made lower highs from there. So this satisfies the conditions for a bearish divergence on ultimate oscillator. So the second was the double top. There was a bearish Kumo crossover at this point. There's a Kijun-sen bearish crossover and the Tenkan-sen bearish crossover. And the price breakout below the Kumo. So this sealed the fate for Ayala Corp. This was a chart in April as well. So a price breakdown followed. But currently, AC was already able to reverse this position. It's already trading at new highs. So the bearish divergence boosted our conviction of a reversal to the downside along with the bearish Kumo twist and the other bearish Ichimoku elements. So again, let's identify the level. The level is the resistance at Senko B. The signal was the bearish candlesticks at the Senko B, which had been forming lower highs and lower lows. Your trigger was the long red candlestick that broke below the Tenkan and Kijun-sen lines. So here's another example using the Forex chart. The New Zealand dollar and yen currency pair. First, we find a bullish reversal, signaling a change in trend. Bullish divergence, I'm sorry. Then there's a Tenkan-sen crossover, a Kumo breakout, Kijun-sen crossover, Chico span crossover, and the Kumo twist. So there was an uptrend. However, there was also a bearish divergence as that uptrend happened. As it trended, it made multiple bearish divergences. So we see two bearish divergences here. So with probability boosters such as the divergences, we are able to assess with higher certainty that what the direction of the market will be. So we add Ichimoku with divergences to give us clear pictures and a more definite direction for the market. So let's move on to other examples of bearish divergences. You have CNPF, bearish divergence here. The first high of the ultimate oscillator is above 70. In fact, it is at 80. And the lower high was formed, thus making a bearish divergence. There's also a double top. And all the signs that we talked about, the bearish Ichimoku signals that signaled a downtrend. So PPC, same thing, bearish divergence. We see the same scenario. So I guess you shouldn't forget about these signals anymore because we've been repeating it over and over. These are the signs to look out for. Your level is the Kijun-sen resistance level. Your signal is the lower highs. And your trigger to sell are the long red candlesticks. Now let's talk about hidden divergences. So what is the difference? Regular divergences signal reversal of a trend. Hidden divergences signal the continuation of a trend. So you have to consider the existing trend. If your existing trend is bullish, a bullish hidden divergence tells you that the uptrend will continue. If your existing trend is bearish, a bearish hidden divergence tells you that the downtrend will continue. These hidden divergences happen at correction or consolidation points within an uptrend or within the downtrend. So hidden divergences are the trend follower's best friend. So what is a hidden bullish divergence? It happens when price is making a higher low, but the oscillator is showing a lower low. A hidden bullish divergence signals continuation of the trend. So there has to be an existing trend. This hidden bullish divergence will only happen in an uptrend. So here's the price, and here's the oscillator. This is a hidden bullish divergence. So here's this chart for globe. Again, we find the bullish signals. So after the price breaks above, we find an entry level. What would be our entry level? Obviously, price had been bouncing off the Kijun-sen level, so that would be our entry level. That would be the support zone, that blue line. Now, what do we find in this chart? After the breakout above the Kijun-sen and the Tenkan-sen, price also made a bullish hidden divergence wherein the price made higher lows and the oscillator made lower lows. So this tells you that this trend will continue to move upward. So what is the signal in this chart? The rejection or the indecision or the doji. That's a signal to buy. And what's your trigger to buy? This green candlestick that crossed above the Tenkan-sen. So the bullish hidden divergence tells you that the trend will continue, and therefore you should be looking for levels to buy or enter the market. So you only needed this level, the signal, and the trigger because you already know that the bullish divergence is there. The bullish hidden divergence is there, and you are likely to get an uptrend afterwards. And from that uptrend, we use the Kijun-sen as the trend line. We find another bullish hidden divergence here that tells you that the trend will continue. Notice as well that prices have also been bouncing off the Kijun-sen, so that confirms our bias that there will be a continuation. Because price can always break below Kijun-sen anytime. But since you find the bullish hidden divergence, you know you're more confident that this price level will hold. I think I repeated this chart. Okay. I duplicated the chart. So example, Mac. Another example, Mac. These are the hidden bullish divergences that signaled trend continuation for Mac. So even if you see that the price went below the Kijun Sen in the middle of this trend, if you are also able to see that there's a bullish hidden divergence, then you might just hold the position because it was able to create a bullish hidden divergence which signals the continued uptrend. So these are the whipsaw moments wherein you're not sure whether to hold the position or not because it's already below the Kijun Sen line, but the range, the trading range still remains. It was able to settle at this price level. You see that there are a lot of rejections at this area. There are long wicks or wicks coming from the candlesticks at this area. So you know that price is supported at this area because traders see a bullish hidden divergence despite the fact that it's below the Kijun Sen line. But what was your trigger to buy? This would be your trigger to buy, this green candlestick. So again, the supports are areas and not specific levels. So you must set not specifically a break below the Kijun Sen, but a few ticks below might still be tolerable for use as support level because there are overshoots like this one. A few ticks below the support level, so you won't get whipsawed. Perhaps 5 ticks or 6 ticks below the support. So let's move on to hidden bearish divergences. They occur in a downtrend. The existing trend should be down. Price makes a lower high, but the oscillator is making a higher high. A hidden bearish divergence signals continuation of a downtrend. So here's what it looks like. Price makes lower highs. The oscillator makes higher highs. So that is a hidden bearish divergence. Hidden bearish divergences let you, if you're shorting a position in another market, it lets you short your position longer. Consolidations or corrections might shake you out or cause you to close your positions, but if you spot hidden divergences, you will be able to hold on longer. So here's an example. The major trend is downward. Everything is below the Kumo. Price is making lower highs, but the oscillator is making higher highs. So it's either a higher high or the same highs for every set of divergences. So these are bearish hidden divergences that tell you that the downtrend will continue. So even if you see that prices seem to be reversing, if you see bearish hidden divergences, you know that the downtrend will continue. So if you're shorting a position like this, just keep holding until you see a sign of reversal. From the bearish hidden divergence, we also see the bearish Kumo signals. So what are your levels to consider? For example, you're selling this or shorting this position in a forex market, but this is the chart for surplus. Actually, I used our equities chart. But theoretically, if you're using hidden bearish divergences in forex markets or other markets, this would be your level or the Tenkan-sen resistance zone. This would be your first sell level. Your signal is a rejection at the resistance. So you know it won't be breaking out soon because it had been rejected at the resistance several times. It won't be reversing position to the upside because it's finding there 6 candlesticks or 7 candlesticks at the resistance point which was not able to break above the resistance. Your trigger would be the bearish Kumo break and the long red candlesticks that followed afterwards. So at this area, in contrast, you see the same lows and higher lows. What do we call that? What kind of divergences is that? That is a regular bullish divergence. And this regular bullish divergence signaled an uptrend for X at this point at the 7 peso level. Now let's use the same idea in the Forex chart. There are also multiple bullish divergences in this chart. These are regular bullish divergences. These are the levels or the support zones where you can enter. Your signal to enter would be the several candlesticks that bounced off the support level. Your trigger would be that long green candlestick that followed afterwards. And then you know that the trend will continue because you find a bullish hidden divergence. At this point, you find the bearish divergence, which resulted in bearish elements occurring. So that regular bearish divergence signaled the bearishness to come. Some examples of divergences. PLDT. This chart has hidden divergences and regular bearish divergences as well. This is the hidden bearish divergence. So it signaled the trend continuation for TEL moving downward. However, at the bottom, we see a regular bullish divergence, which shows us a possible trend reversal. There was a reversal. After that reversal, we find a bearish divergence again. So many divergences on the TEL chart. And then there was a bearish Tenkan-sen crossover and a bearish Kijun-sen crossover. A bearish Chico-span crossover as well. Bearish Kumo twist and the bearish Kumo breakout. So that resulted in a downtrend. Now let's move on to our next topic, using Ichimoku with a Fibonacci ratio. I hope you're not sleepy yet. If you're sleepy now, this topic will make you even more sleepy. So Fibonacci retracement was based on the Fibonacci sequence. It is based on the idea that markets will retrace a predictable portion of a move, after which they will continue to move in the original direction. So it uses horizontal lines to indicate areas of support or resistances. It is calculated by locating the low and the high of the chart, or vice versa for reverse Fibonacci retracement. After a significant movement up or down, the new support and resistance levels are often at or near those lines. So I'm sure many of you already know Fibonacci retracement. Just to refresher, or just to give a refresher course. This is the chart of nickel. This was the high and this was the low. The high was at 850 and the low was at 408. It made a strong run upward, and then on its way downward, it made several bounces at its Fibonacci levels. So this was a 23.6% Fibonacci level, which made a small bounce, tried to retest the previous high, but failed. The second Fibonacci level it retested was a 50% is not necessarily a Fibonacci level. It's simply a 50% level, which traders often use because it is often used as a bounce point, but it is not a Fibonacci level. It made a short bounce towards the next Fibonacci level. So we know that if a Fibonacci level is broken as support, it will serve as resistance afterwards. So here the 38.2 was broken as support, price bounce of 50, 38.2 served as resistance for the bounce. This was your next bounce at the 61.8 level. This is the golden ratio, so this merited a stronger bounce. From the 618 level, it was able to bounce up to the 38.2% level from 590 to 7 because the golden ratio is a strong support level. It retested that level once again, and it made an even stronger bounce after towards the 23.6 Fibonacci level. So we could combine these levels of support and resistance with the supports and resistances that we find in Ichimoku charts for added probability boost. If we find confluences or common areas of support and resistance between the Ichimoku elements and these Fibonacci levels, then we could assume that this is a stronger support or resistance level and should be used for making entry and exit. So this was the last bounce that resulted in a strong movement for Nickel Asia. So let's look at the chart of X once again. Here's how we combine Ichimoku and Fibonacci to find confluences. If you bought shares at the low near 7, you're looking for a price where you could sell your shares. So you will plot the areas where price might encounter resistances. The first resistance was at the 1036 peso level, which was also the Chico span range and also the Senku A resistance. If you look to the left, there's a Senku A at this level. So that level from there to here is the resistance level. If price breaks above this level, then you would have the 12 peso level to contend with. So these two rectangles, this is the Senku A and the Chico span range defined previously. So these were resistance levels. And this is the next resistance level to contend with at the 12 peso level. There's also a consolidation in price reflected by the Chico span at this level and also the Senku span B area. So that is your next resistance. The Senku B is the longer term resistance line because it represents 52 periods. So it is a flat line. Flat lines are often magnets to price. Resistance 3 is at the 1450 level. Again, this is where we find the Senku A and the Chico span. Resistance 4 is at 1650. We find here the Senku B line to the left. So you always look to the left for resistances and supports. Always look to the elements at the left side of the chart. The next chart will show, the next slide will show the same chart, but this includes the Fibonacci levels. So this was the same chart. I plotted the Fibonacci in reverse from the low to the high. Noted that I plotted the candles from body to body. Just to be consistent, plot from body to body or wick to wick, but do not mix the body and the wick. So this chart shows supports and resistance using Fibonacci levels. Resistance 1 is near the 10 peso level, right? Previously defined. This is the 23.6 Fibonacci level. So remember when we said that supports and resistances are not exact levels but areas. Senko span A is located in the same area. It's located in the same zone, and it approximates where resistance 1 is located in the previous chart. Resistance 2 in this chart is located at 38.2% Fibonacci at 1193. This is where we also find the Senko B from the previous chart. The resistance 3 is at 15 pesos, or the 618 Fibonacci level, a strong resistance level. Again, we find the Senko A here as well. Resistance 4, 17. We find the Senko B here as well as the 78.6% Fibonacci level. So we know that the Ichimoku system also lines up with the values or the lines in the Fibonacci ratio numbers in a chart. So when you're looking at retracements, you can look at these flat tops and bottoms of the Kumo or the Senko spans A and B. And you know that's probably lining up with a 50% or 61.8% retracement level or the 38.2% level. So the Fibonacci levels are also good levels for you to look at on retracement. If the Fibonacci level lines up with the Ichimoku element, then that is considered a very good support or resistance level. So in the previous chart, we used Fibonacci, reverse Fibonacci, and confluence with Ichimoku elements to find confluences of resistances after a security bounces. This allows us to find sell areas or areas where we could exit the market when we are swing trading. In this next chart, we will use Fibonacci levels along with Ichimoku for our swing trade. So support 1 is from the top. For example, you're coming from the top. The right side of the screen is not there yet. From the top at 32, your first support level was at 23.87. This was a strong support level from the downtrend at 32, because this is where you find the Senko span A. When price bounced, it was met by the Senko span B. This is also where we find the 23.6% Fibonacci level. A swing trader would likely sell here because this is a strong resistance. After hitting the resistance, price falls again. Now price breached below 38.2% Fibonacci and went to our 50% level. This level, along with the Senko span B, could be a good bounce point. Okay, this is considered support. So this would be a sell at that top of this the 23.87 level, which is 38.2% level. And that is also Senko span A. There's a drop towards the 78.6% Fibonacci level. At this area, you find two supports as well. We find Senko span A and the 78.6% level lining up at the same area. So we expected a price rebound, so we buy this area, and you would expect strong resistance at the Senko span A level as well. So you just combine Ichimoku and Fibonacci to find strong supports and resistances. So let's go to some examples. Oops. Some trade examples. So we will plot reverse Fibonacci levels for Bloom after it bottomed out at 290. Let's go to our charts. Let's go to Bloom. So we plot the reverse Fibonacci levels from Bloom from the high of 1243 to the low of 290. The low was at exactly 290. So we go from wick to wick. I plotted from wick to wick, but I couldn't make it exact in the Investagram's chart. It's either 289 or 290. Okay, let's go for 291. So let's zoom in. So when Bloom bottomed out at 290, we'd like to know how high the bounce would be and what are the resistance levels. So we got the 1243 as the high, the swing high, and we used 290 as the swing low. Let's zoom in. So at 470, where's 470? This area. At this area, Bloom broke above the Kumo. It made a reversal from here, right? It made the Kumo cross above the Tenkan and Kijun cross over here. There's a Chico span cross over here. And at this area, it broke above the Kumo. So there's a clear breakout. If you weren't looking at their Fibonacci, you would think that this would go on forever. However, the Chico span hit resistance at the Senko B line here. At the same time, that level was also 23.6% Fibonacci. Ayan, 23.6 Fibonacci at this area. So there were two resistances at this area. You have the 23.6 Fibonacci and the Chico span, and the Senko span B, which prevented the Chico span from moving outside the cloud because it's a strong resistance. So there's a confluence of resistances at this area. While Bloom had bullish signals from Ichimoku, it was a failed breakout. A factor that could have contributed to that was because the signals were weak. What are the weak signals? The crossovers happened below the Kumo. Therefore, these signals are weak, right? If signals happened above the Kumo, these would be strong signals. But since they happened below the Kumo, these are weak bullish signals. So, like we studied last week, signals which happen below the Kumo would tend to, if signals happen below the Kumo, the price would tend to consolidate or move sideways or retest support before moving up further. Since weak yung signals, it hit support, it hit resistance, tapos nag-consolidate because the signals were weak in the first place. However, they are still bullish signals. So now price went down to this level. So how do we know that it will stop at this level? Do you see this Chico span here? Maybe we could zoom in further. This Chico span, at this area, Chico span found support at the Senko B line. And then it bounced. This green line bounced. So the prices found support at this area. At the same time, if we add some Fibonacci to it, This was also the area where we find the 618 Fibonacci level. This is a strong support area. This is the golden ratio. So you have again a confluence of the Senko B acting as support in this area for the Chico span, and also the 61.8 Fibonacci level. So there's a confluence of supports between Fibonacci and Ichimoku at this bounce area. So upon bounce, there's another uptrend. There's another set of signals here. We find the the Tenkan-sen crossover here, Kumo breakout here. There's also a Chico span breakout here. Again, this happened below the Kumo again. The Tenkan-sen crossover happened below the Kumo. So this is a weak bullish signal. So what happened again? Price broke above the Kumo. It seemed to have trended above the Tenkan-sen and Kijun-sen lines, but it again hit resistance at this area. This is the 38.2 Fibonacci level, or Fibonacci resistance. Ayun, if you go to the weekly chart, itong resistance area na to ay nandito din sa Senko B, Senko A. Senko A line, yung area na yan. But this is the level for Senko A. Dun din siya nauntog if you look at the higher time frame. There's a confluence of resistances on the higher time frame this time. Tapos, on the higher time frame as well, the Chico span hit resistance at the Kijun-sen line. So, again, you look to the left for signs of resistances. Ito yung reason kung ba't nauntog siya. The Chico span resisted the Kijun-sen. At the same time, this area is also close to the Senko A resistance on the Kumo. So now you have a confluence of resistances across different time frames and among the Fibonacci and the Ichimoku elements. So tatlo na yung nagde-decide ng resistance at this point. Ichimoku, time frames, and Fibonacci. Again, it dropped back down. No, price dropped back down. It found support here again. So we Fibo that again. This is, I guess this is probably 786 Fibonacci, 886 Fibonacci, 886 Fibonacci level at 433, 886. In Ichimoku, 886 is an important level. It's an important Fibonacci level sa Ichimoku itong 886. So yan, nag-bounce siya dyan. So looking at the Ichimoku elements alone, you wouldn't know that it would bounce at this area, but since you have the Fibonacci level there, it actually bounced. So if you add the Fibonacci, you have an added clue na dito magbabounce. All we know in Ichimoku is that, remember that C pattern? Your clue that this will bounce is that it formed a C pattern. Yung C na pinag-aralan natin last time. So may C, so alam natin magbabounce because there's a huge gap between the Tenkan-sen and the Kijun-sen. At the same time, it's already supported at the 886 area. So again, it made another uptrend. May bullish crossover na naman tayo. Alisin natin itong small Fibo. Pakita natin ulit yung kanina. So nag-bounce siya. And then if you look at the weekly chart, though walang clue sa daily chart kung saan siya magbabounce, sa weekly chart meron. Because at this area, nandyan yung Senko A. Senku A line ng Kumo mo. And if you look to the left again, the Chico span was able to use the Kijun-sen as a reference area for a bounce. Look to the left, nag-bounce yung Chico span doon sa area na yon, and it broke above the Tenkan-sen. So nag-break out din yung candlesticks mo dito sa 510 or 236 Fibonacci level. So, kung titingnan niyo yung weekly chart kasi mas malinaw dahil nandiyan yung defined resistance dito at dito. Yung bottom Kumo and top Kumo, nagba-bounce lang siya dun sa Kumo. No? Dito sa area na to. The same time, yung Chico span, nagba-bounce din siya sa mga Kijun-sen at Tenkan-sen lines. Let's go back to the daily chart again. Ito yung pinag-uusapan nating area kanina. So yung 38.2 is a strong resistance level, right? Even in Fibonacci, it's a strong resistance level. Ang malalakas na resistance at support ay 38.2 at 61.8. So ayan, so nag-consolidate siya around that area for a long time. Ilang months din to. Paikot-ikot siya dun sa 38.2%. Finally, after it breaks above 38.2%, it made a strong move upward. And notice that every move upward, each Fibonacci level serves as resistance once again. Resistance yung 50. Resistance yung 61.8. Tuuntog siya dito. Resistance na naman 78.6. Yung peak niya, between 886 and 12.37. Ito, shorter term Fibonacci, kung ipa-plot natin to. Short-term Fibonacci, which is going to be more accurate than the longer-term Fibonacci. Ito, ang untog niya ay nasa 1786 extension ng Fibonacci on a shorter time frame. Now again, ano ulit yung significance nitong 12 peso area? Binanggit natin kanina, this is the monthly resistance. Ang gulo-gulo na ng chart natin, ano? Tanggalin na natin itong Fibo na to. Ito yung 1786 Fibonacci ay also, in the shorter time frame, was also the Kumo bottom or the Senku A resistance ng monthly chart. So it all comes together. Time frames, Fibonacci, Kumo. So essentially, whatever system you use, you often come up with the same results. Pero when combined together as supports and resistances, they become much more reliable and stronger supports and resistances. Itong ani is another favorite example of mine which I use all the time. Diba napag-aralan natin dati yung nung nakita natin na ang ani ay lumabas na dun sa kumo niya, we know that wala na siyang resistances na malalakas sa taas. At the same time, the Chico span also entered inside the Kumo. Tapos, kung i-Fibonacci mo siya, ito, diba, ang strong resistances, sinabi natin ay ang 61.8 level. Lumampas na rin siya doon. 61.8 resistance level. So, this will continue going up until the Chico span meets resistance here. Same way with IMI. Nasa labas na rin ito ng Kumo. Kung ito ang gagawin nating reference ng ating Ichimoku. Lampas na rin siya sa hindi pa siya lampas sa 61.8 pero ito na ang target niya ngayon, 2285. Susunod na target ni IMI on a bigger time frame. Same goes for MAC. Itong si MAC, since new highs yan, we'll use extensions this time. Ito, lumampas na siya sa extension na to. But makikita nyo sa Ichimoku, wala na siyang resistance din kasi it's just trending above a green Kumo. Pero wala na siyang resistance sa taas because it's been making new highs. So, just keep holding this until it breaks below. Kung long-term trader ka, sa weekly chart ka titingin, itong support mo kung long-term trader ka, nasa 14 pesos pa. But if you're a short-term trader, ang support mo nasa 16. This would be your cut-loss point. Kasi momentum trader ka, short-term trader ka, so you use a Tenkan-sen line. If you're a position trader, you use a Kijun-sen, which again, like I said, was also the Tenkan-sen for the longer time frame. So if you look at the multiple time frame charts, if you want to hold this for months, itong stop loss mo would be the weekly support lines. So we covered what we have to cover about Ichimoku, using it with other tools, Fibonacci, etc. So do you have any questions? As we move forward, we're done with the webinar. Do you have any questions? Sige, titignan ko yung ay, sorry. Ngayon ko lang yung mga message niya for a break time. Sorry, Wilfredo. Because I've been so engrossed in the presentation, di ko nakita itong mga tanong niyo. So, again, James, yung Fibonacci, of course, define your time frame. Kung saan time frame mo gusto, doon ka magpa-plot ng Fibonacci. If you're going for a daily trade, sa daily ka mag-plot. If you're going for a weekly trade, you're going for a weekly plot. But often, kung kunyari gusto mag-intraday trade, sa intraday ka rin. Kunyari itong MAC, itong MAC kasi all-time high na to, so wala na tayong Fibonacci extensions na lang ang titingnan natin dito for every for every move up. Makikita mo yung target price niya for every move up. Ayun na, nauuntog siya sa mga every level ng Fibonacci, So, magpa-plot ka ng daily kung daily yung trades if you're short-term trader. If you're longer, medium-term trader sa weekly, ka magpa-plot. Di ba, you use the weekly chart for, if you want to hold on to the position for months, you use the weekly chart for entry and exit. If you want to hold on for a few weeks, you use the daily chart for entry and exit. So, doon ka rin magpa-plot. So, kunyari magde-day trade ka naman, you use the daily chart then for, use the hourly chart for plotting. So, kunyari, nag-high yung IMI at 1988, then you plot the Fibonacci, you see that this becomes a support area kasi nandyan yung Senku, nandyan na yung Senku A mo, tapos nandyan din yung 50% 50% level mo. So, pwede kang sumalo dyan. This is what your level. Your signal would be the double bottom at this area. Nakita mo tong dalawang candlesticks na to, nag-double bottom. Ang trigger mo would be this bullish engulfing candlestick, or not a bullish engulfing, but a bullish green candlestick. So your level, your level is this 50% area along with, titingnan mo rin yung Chico span. Diba ang Chico span, ginagamit niyang bounce areas ay price or the Ichimoku element. So the Chico span bounced off this area. Itong price bars na to. So that would give you conviction that magbabounce na to. You have the level, and then your signal would be the double bottom ng candlestick dito. Tapos nag-bounce pa yung Chico span, and your trigger would be this long green candlestick. So that would be a buy. You could have bought at this area hanggang doon sa trigger kahit sa close ng green candlestick sa 18 pesos. So na-trade mo siya. Tapos nag-breakout pa yung price bars. Breakout above 23.6 level. And this level is an extremely bullish area, right? A bullish Fibonacci area above 23.6. So it broke above that. It retested 38 pero it was nasalo naman siya ng Kumo. It broke above the Kumo again. So, yan ang day trade mo would be from there to here. From here to here. Kung ikaw ay day trader, may level signal and trigger ka dito. Ano naman ang level signal and trigger mo dito? Level. Resistance level kasi siya ng previously. Previous resistance siya. Look to the left for the resistance. Ang signal mo would be several candlesticks, 5 candlesticks bouncing off the resistance at di niya ma-break. So that's your signal na hindi niya kayang i-break. Your trigger would be this red candlestick breakdown below the Tenkan-sen line. So sell ka na dyan. You have the level signal and trigger at this point. Tapos, may level signal and trigger ka na naman dito. Balik natin yung Fibonacci. Ayan. Nag-bounce siya dito sa 382 Fibonacci level. Tapos, it settled above the Kumo. So, ilang candlesticks yan? That's an hourly chart. So, 5 hours siya nag-settle dyan. 6 hours. Naglalaro siya sa Kumo na yan. Above the Kumo for 6 hours. So, you have your signal that this level will hold because it had been bouncing off that level for 6 hours. Your trigger would be this candlestick here. Itong long green na naman, and it also broke above the Tenkan and Kijun-sen line. So, ang trade mo, be from there to here again. Ngayon, wala ka pang level signal and trigger dito sa area na to kasi it referenced this area for a time, di ba, nung bago mag-closing, tinry pa niyang mag-breakdown below 20, yung IMI, pero hindi siya successful. It referenced this level. It tried to make that as a resistance, pero at the close, nasira niya. Ngayon, ang reference niya ngayon would be the nearest resistance, ito na. So, ito ang level mo. May level ka at which pwede siyang mauntog, pero wala ka pang signal kasi isang candlestick pa lang yung nauuntog sa box sa high na yon. If this candlestick hits that area, you have a signal. Ang trigger mo ngayon, kung nag-long red candlestick at nasira itong kung nag-long red candlestick dito, nag-signal siya ng maraming candlestick na hindi makalabas dun sa 21.45 na high, tapos nag-long red siya dito, tapos nasira niya yung Tenkan-sen, that would be a signal to sell. So ngayon, wala pa siyang signal to sell. So again, it depends on your time frame kung saan ka mag-fibo. Pwede ka mag-fibo sa daily chart, sa hourly chart. Pwede ka mag-fibo sa weekly chart. Yan ang fibo mo. Dapat kasi pang mag-fibo ka, may established top and bottom, di ba? Ito, hindi mo pa na-establish yung top kasi hindi pa siya tapos. Hindi pa siya nagre-reverse. Kaya hindi ko magawang, basis ng fibo. Ito ang gagawin kong basis ng fibo. So, kung kunyari ito at dito, nag-high dito, tapos na-confirm mo na nag-break, nasira yung, hindi niya ma-break yung high na yon at gumawa siya ng candlestick na to, alam mo na ito ang top ng fibo. So, yung reference mo would be, nandito yung 50% as well as the Tenkan-sen, may level ka, may signal ka because it made a double bottom, and you have a trigger, so that would be your buy. Itong trigger na to. Ngayon, for current, assume lang natin, ito yung low. Assume natin na itong high. Itong gagamitin nating high kasi tapos na to. But you can't use this as your high because hindi mo pa alam kung wala pa siyang red candlestick na kasunod. So, ito muna ang high mo. So, at this point, you know that the consolidation was very shallow because it was above the 23.6 level. Di ba pag mababaw ang consolidation, the chances for a breakout is very high. which is what happened. Nag-breakout nga siya because mababaw ang consolidation niya. Kasi buyers are willing to step in at higher prices. They're not waiting here. They're not waiting here at the 50%. They're waiting. In other words, the buyers are willing to pay higher. So nag-breakout nga siya. So ang susunod mo, pag nakita mo yung top nitong susunod, pag nagkaroon siya ng red candlestick, you know that's a top. That's when you plot your next Fibo level. Tingnan mo kung saan ang retracement. If you find that the retracement is at 23.6 then it will make another breakout. Retracements that are shallow until 38.2% are likely to make new highs. So ito, yung sinasabi natin group, so yung slides, yes, I always send, last week I sent you the slides and also the link to the ano, diba? Yung part 1, I sent you the link and the slides as well sa email. Check your emails. So I'll do the same this week. Tapos yung group will be reviewing, we'll set review sessions. Diba meron tayong weekly chart reviews. Meron din tayong review session for Ichimoku. We can do that before or after the weekly chart reviews, but not as regular as the weekly chart reviews. So yung chat group, we can set up a chat group just for Ichimoku attendees. Actually, mga Ichimoku attendees ko, meron tayong Facebook group, pero hindi ko na masyadong nagagawa yun because I'm busy with Discord. So, we'll just make another group in Discord for this. Pero, so far naman, yung mga kasama natin doon sa Discord, most of them understand Ichimoku, although, yeah, they might be confused when we talk about other things. So, we can make another group for this. So, sa Discord na lang nga tayo. So, what else? So, thank you very much for attending as usual. Thank you for all your support, guys. You can still send me questions if you have any in Discord. So, it's lunchtime. Have an early lunch. Thank you for attending. See you at Discord and have a good lunch. Bye.